Let's do a silver price update with David Bird, aka ASX Trader, and me, Joe Main. You are watching Good Morning Stackers. It's going to be a great show today. David is the founder and head educator at Mastering the Markets. And we're going to talk about a whole bunch of stuff. We've got chart requests for you as well. Priority will go to super chats. We'll get to that in a little bit. David, welcome back to the show. Good to have you.
Thanks, Joe. I was trying to figure out when was I on last time? I can't remember the date.
Let's call it sometime last year. November, October, and a lot has happened.
Before silver went ballistic too. I think it was, because I'm pretty sure it was like when silver was down at $30 or something.
Could have been there. I think it actually might have been before the $50 breakup. But let's get straight into it because you're here for about 40 minutes or so. We're going to get through silver update. I'm going to also ask David today, what's looking good for 2026 specifically, any particular sectors? Then we'll do gold, platinum. Then I'm going to open it up to chart requests. Here we go. I'm going to get it over to you. Let's talk about silver first. What's been happening? Of course, we've been talking about the wave 3 top coming in, which looks like it might be, but let's get your thoughts about silver, where we are, and for 2026, please.
Yes. So I will pull up silver. So let's type her in. So what we're looking at now, and you know what, I'll go back to previous cycles so you can kind of get a feel for how the markets move.
Sure. Now I'll double check that. Are you have you got the silver chart up there? Because our screen is a little bit different.
Okay. Hang on.
Because you might be on a different
sharing
tab.
and I'll share this one.
Sure.
So type window and there it is there. Share. All right. How's that? Is that better?
All right. Let's have, there we go. And you're up, sir. There we go.
Beautiful. All right. So if we look at the last cycle, we can see that we had silver appear in 3 phases. You've got what's called the accumulation phase, the public participation phase, and the excess phase. Okay. And that's because humans are very predictable. You know, no one knows something's happened in the first time, which is when the smart, stealthy money gets in, people that know how markets work and know when something's undervalued, so they accumulate it through time. Then when it becomes a little bit more obvious, the public start getting involved, okay? And then when it's like, you know, you start hearing about all the money that people have made, then you get what's called the excess phase, which is where every man and their dog's involved in silver and it typically marks the top. You can also see that you get those phases within each phase as well. So you can see you get the accumulation phase, you get the public participation phase, and you get the excess phase within the phases as well. So you kind of always think about it like down during the accumulation phase, sentiment's typically very bearish, very pessimistic. And then as the cycle matures, you get more bullish. And then at the very, very top, it's that total excess phase of, you know, this thing will never go down again. And we're all so rich and blah, 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 blah.
Which, by the way, to interrupt there, was, as you pointed out to me when you first came on the show, and what I realized after the fact, after learning, geez, there's 3 phases to a market. I bought in 2010, which was basically halfway through that last excess phase right there.
Here. Yeah, right here. So
around about $25 is when I bought. Yeah.
Yeah. And that's typical. Why did you buy then? I guess people were talking about it. You heard about
YouTube,
the dollar debasement, maybe GFC had happened. And, you know, the narrative was that the whole financial system's going to collapse. Get your gold and silver and you'll be right for the rest of your life kind of thing, you know? So, you know, you can see how the narrative fit it perfectly as well. And again, people would not have fathomed, especially, you remember the GFC happened right there. So right after the GFC, everyone's so bullish on it. No one would have fathomed that then you're going to go into a bear market for, you know, 10 years after that.
Yep.
You know, and you can see how sentiment matches it perfectly. So looking at those cycles, you can kind of also depict where we are in the current cycle. Okay. You can see here, during that first phase was what's called that first move up, where people started getting quite bullish towards that top there. And then what did it do? It went into a 4-year reaccumulation phase, you know, like here. Okay, so first push up, reaccumulation, first push up, reaccumulation. And then where we are now is that we are in the public participation. This is something that I was speaking about with my students a lot back here. I said, guys, the minute you start breaking out above this high, you're going to get the public involved. It's going to be all over the media, and this is where you will get the public participation. When I bought was down here. Okay, I bought once it broke out through there. And for that whole period from there to here, I was talking about how there's going to be such a ballistic run on silver and people won't see it coming. And the sentiment that I got at the time was that, oh, silver's like watching paint dry. You know, it doesn't do anything because it didn't. Look, it hasn't done anything. Look,
come on, do something.
And, you know, they've been fed this narrative of I've heard silver's been undervalued for the last 10 years. I'm like, yeah, well, your friend that told you that was exactly right. Because if you look from now, 2025, go back 10 years to 2015, look what you bought. The very bottom. And also, yes, silver was undervalued then, but people don't understand that when something becomes undervalued, it doesn't just bottom and then go to the moon. Okay, it goes into that accumulation phase because big money is not just buying a couple of $1,000 like us. They're filling their bags with billions of dollars worth of this stuff. Okay, and they do it over a long period of time without alerting the market. And once they've got their bags filled and they're ready to let it launch, they'll stop shorting. And then that's when, boom, the trend starts to get established, and that's where then the public get involved. All right, so you can really see where we are right now. We're here. What I don't know is one of two things. I don't know if right now this pullback we've had is this period here, where you're just getting that last pullback before one more high, before the bigger crash, or are we here where it's that bigger one before that bigger one? But I know, you know, I'm almost 99.9999% sure that we're just going to it's just a healthy zag retracement, and we've at least got another cycle to go.
Yes.
But, you know, there's overwhelming amount of evidence. Like I could show you 100 charts and we could probably spend the whole 3 hours talking about that. But it's just in looking at this cycle, you can see that. If you were to tell me right now, which one do I think it's here or here? I think it's here.
Okay.
I think it's that period right there where we've had the first move up, the pullback. This is what's called a 1, 2, 1, 2, and then 3, 4, 5. Then you get the bigger correction, and then you get the blow off. So that's what if you were to say right now, gun in my head, what do I think is going to happen? That we've, we kind of go up to that April-ish period. We get a new high into April. Everyone gets really bullish again. Oh my God, I knew we were right. And then the market has that real decent correction before it. What's exciting for silver though, is that silver during this period here, that is where the miners go absolutely ballistic. Okay. The miners don't perform during the first part because that silver needs to establish itself that it actually is a real move. And then when it consolidates and shows that it sets a floor, that actually the floor now is $10. So let's say it sets a floor at say $80. All the miners then, all in sustaining cost about $20. You can then start seeing what the profit margin's in, even with your lowest case scenario. And then what you start realizing is that, these are still very undervalued. They're leverage plays to the metal. And then it's like alt season in crypto. The move happens on that final move, and a really easy way to explain that is if you go back to Bitcoin cycles, etc. During the Bitcoin cycle, during this part here, altcoins didn't take off. During this part here, altcoins didn't take off. During that first, again, you can see it's the similar thing with silver. Once it took out the high, the public started getting involved in Bitcoin there. Altcoins still didn't take off there. Like they took off pretty much on par with Bitcoin, but didn't outperform. Where altcoins outperformed was the top of the cycle during this part. Okay, and you'll get the exact same thing with your precious metals. All right, once they know that we're in the commodity cycle, once they know that the metal is in a bull market, you get and I'm talking 10x outperformance. From here to here, you had altcoins match Bitcoin, maybe slightly outperform. And that's what you've had with silver miners right now. They've pretty much matched silver, maybe slightly outperformed. Once in that final phase, altcoins 10x'd against Bitcoin during that part on average. Some of them did 50 to 100x. And that's the kind of thing that you'll get in your silver miners, etc., during that phase as well, is that you will get that leveraged outperformance. Okay. And again, you can go back on all cycles and see that kind of stuff.
Amazing. So, and as you've called it previously, and it's one of my favorite new lines. It's like altcoin season for rocks, which I absolutely agree. I'm quoting that everywhere now. So, the next question will be, and naturally the question will be, okay, so that silver miner season. Let's just focus into just maybe 2026 specifically. So you're talking about, and I'll go back to you there, that potential for silver for that. So let's talk about the next sort of, up until the end of this year. So if you can zoom in just a little bit, just for my followers, into that sort of, into that time frame there. So potentially that move up to possibly a new high in April, but then in that time frame in 2026, you believe it might potentially, that kind of sort of fake out, get everyone on the wrong side, and then potentially that kind of like sideways kind of move, something like that. Yep.
Yeah. So if you look at seasonality, so if you look at seasonality for gold, silver is pretty much the same thing as well. This is where we are, and the fact that you go, see, it's really bullish. And then you see February get this pullback, which is what we
can't see the screen, but that's okay. Don't stress about that.
Sorry,
not a big deal. That's all right.
Actually, I can bring it across. Let me show you here.
No worries.
Silver.
There we go.
Yeah. So if you're seasonality, so again, you got to think trading and investing is very much like fishing. Doesn't matter if you're the best fisherman in the world. If you go to a pond where the fish aren't biting, where they aren't hungry, you're not gonna be able to do very well.
Yeah.
And vice versa. If you're not a very good fisherman and you chuck your line in a place where there's lots of hungry fish, you're just going to naturally get lucky and do well anyway. So this is why knowing when, and this is why markets make it seem like it's really easy sometimes, because beginners come in, they make money, and it's just that they, as a beginning fisherman, chuck their rod in the right spot.
Just like I did, what I thought I was doing in the excess phase of 2010.
Silver, exactly.
Thought I was the greatest investor in the world.
So where we are, you've had that, bullish market to there. You get in that dip, which is what's happening now. But seasonality is actually usually bullish up until that kind of April period. And then you get the larger corrective move into the kind of September. So if you just go seasonality wise as well, that would kind of make sense as well. Like this is that sharp pullback. You get a move up to April. And then you kind of, again, I don't think this will then be a deep retracement. It'll be people capitulate through price or time. I think it'll be a time thing.
Yeah, get chopped out.
Yeah, it'll be like this period here. Like, look, that was just choppy, boring sideways. Where it was still healthy. But people stopped talking about.
Sure.
So and silver's very good at that. Same thing there. Like long sideways. They're very good at capitulating people through time.
All right. So now let's talk about that particular amount of time where we're going to go through potentially that chop within, a lot of this year. Two things. My subscribers, one will ask, well, what would the miners be doing at that point particularly? But also I want to ask, if you can touch upon as well, what are you the most bullish on sector-wise? Now, I know the answer, but I want my subscribers to hear what you're the most bullish on over the next, by the end of this year, roughly. Because I know there's something quite different that you're looking at the moment.
Yeah, definitely. So let's, as we know, silver really follows gold. So often the answers you seek in the future can be found in the past or found in the big brother, something similar. So if you look at gold, when it went through something similar, so gold here on the right, when it went through something similar here, so we'll go to the daily time frame, which is same thing. It's that same kind of period. See how we peaked in April and then did nothing until September-ish?
On the right-hand panel there,
end of August, September. Yeah, on the right-hand panel. So that's the same thing. Gold was in a massive bull market, and then it went sideways from April until September. Seasonality, same kind of thing. So this is the same kind of thing that I'm expecting with silver this year, that you will get that same kind of healthy sideways consolidation. But if you look at what the gold miners did during that period, they also consolidated, but during the periods, they actually outperformed as well. So I'll show you what I mean. So if you look here, gold top there, miners top there, they both corrected together. And then it came up here and did an equal high. And you can see gold miners went a little bit higher. And then this pulled back, And then if you look, by the time this actually broke out, look at where gold miners were.
Right. So they're leading the charge.
So, yeah. So see how they're outperforming. So during that period there, they, from 7th of April there, so let's go from that top. So from there to there, they were up 34%, and gold hadn't done anything. It was still consolidating. So, probably something like that where you'll start to get that rotation out of, and that's because, again, a lot of these gold miners were priced at much lower prices. And then once they see that it's hovering up here at $3,500, they then go, oh, geez, even if it's $3,000, all these miners now have a PE ratio of this, which means the multiples of this, which means they, oh, wow. And then they all get re-rated. Okay. That's the same thing that will happen with your silver miners. Once a floor is established, and then institutional money then know, okay, this is kind of like your base on silver. Once you start consolidating there, then everything gets re-rated to that price, and they always have a margin of error, a margin of safety. So, it might be 25% below that price, just to, give you that margin of error. And then that's where then you realize, and then a lot of leveraging starts to take place.
Amazing. So that's what we have to look forward to, very likely, with silver miners. Now, let me ask the question about that sector. There's a particular sector you're really hawking at the moment, you're eyeing off to believe, while we might be going through that chop with the silver price, just sort of a general range, there might be something that's really taking off. And my subscribers here, we love precious metals, of course, all the, the physical stuff, but, very much into anything else tradable that can, help ourselves, our family, etc., and increase our wealth over time. What's that main thing that you're looking at the moment, that sector, please?
Yeah, definitely. So I'll just do a really quick look at something that will show you why I'm very bullish on this sector.
Sure.
So I like to educate before I say. So this is the Dow Jones Industrial going back 100 years. There's this pattern here, which is called an expanded flat, that happens right before every major bull move. So you can see here before the roaring 20s, you take out the high, you take out the low, major bull market, because it gets everyone out of the long, everyone out of the short before it takes off. Right? If you look at before the .com bull market, same thing. Take out the high, take out the low, major bull market. If you look at this current bull market, take out the high, take out the low, bull market.
Amazing.
Even if you want to go back to even the current COVID drop, same thing. Take out the high, take out the low, bull market. Okay, so picture that. It's a textbook play that the markets do to wipe out everyone on the wrong side before they take off. So the sector that I'm extremely bullish on, like from 2026, is, and I'll go into the USA, is the energy sector. Okay, so if we now zoom out, and if you do a lot of research around the phases of the commodity cycle, precious metals lead the space. And then after that, it goes into industrial metals, your energy, your soft commodities, and then it starts to rotate back again to precious metals. And that's the cycle. So if you look at the energy sector here, again, you can see during that last commodity cycle, energy did very well from that 02 up until 2014. Okay, so same thing. But if you look here, take out the high, take out the low, and now we are just broken up after this one here.
Great.
Okay, so I believe that you're going to get, that is the beginning. This is the first wave up, the accumulation phase when no one's interested. This is your nice healthy correction, and we've just entered the public participation phase of energy. So yeah, very, very bullish on that. And if you look at our energy space, XEJ, same thing. You'll see, let me get off the log. You'll see we were in a big bear market. We've broken up out. We've come back, retested this support. And now once we get above that level there, you'll notice that same thing. Bottom, liquidity bottom, take out the, why are they buying higher? Why are they buying higher? So our energy sector is looking very good as well. So yeah, very, very, like if I had to choose right now, what was my favorite sector that I think will outperform the market for the next 5-10 years, it's that sector right there.
Wow. Okay. Now, for my subscribers who go, well, energy market, what do you mean by energy market? Of course, we're talking about oil, natural gas. Would you throw any other mini sectors within that sector?
Uranium. Yep. Or anything to do with energy. Uranium, solar, hydrogen, what else you get? Yeah, oil, gas, just anything around the energy. Uranium has been the leader in the space.
Yes.
So if you unpack uranium, you can see that, again, big bear market, accumulation, first move up, reaccumulation, and this one entered the public participation there. So we're dead right in the middle of it now.
Yep.
If you chart uranium against gold, you can also get a bit more of a good view as to where it is in the cycle as well. So again, let me just delete this for you. You can see that we are in this sideways accumulation range right now as well. So once that breaks up through there, uranium should outperform gold, etc. So yeah, there's a couple of good leaders in there. I honestly think oil is about to shine. If you look at the bigger picture, zoom out on the 3 monthly time frame. So let's look at the big picture. We've come right down to a perfect zag zone right now, and we have just crossed bullish on our very oversold, just crossed bullish. And if you look back on history, every time we've been this oversold and just crossed bullish on the bigger time frame, we've at least had several month bounce.
Yep.
Okay. There, here, and here. So these were all the periods. So anyway, if you also look at seasonality, when the fish are biting, oil is historically very bullish from February until September. So seasonality also
aligns. Yeah, I mean, it aligns almost inverse with the precious metals market as well. That's amazing. So it does sound like, at least for this small period of time, whether just roughly in 2026, energy might potentially outperform the precious metals. It doesn't mean you don't sell out of your precious metals. As you've said, and as I've said, I've still got all my physical silver because I know what's coming later on down the track. When we go after that chop, we go into the excess mania phase again. Just as I say, every man and his dog is getting in, and that's taking us into maybe your 2030, 2032 kind of area for that sort of excess phase pullback. But just in this small sort of window, if people are looking at, they don't just want a dollar cost average into physical silver, they may want to outperform that. Maybe the energy sector is one to look at as well. And I know you have it said specifically. You've said it in the academy and in the presentations there. But if you had $100,000 now, or if you had to pick one stock out of that energy sector, what would be the one? And I know the answer, but can you tell my subscribers what that would be?
So there's
without by the way, I should say, without saying none of this is financial advice, and we're not financial advisors.
100%. So Woodside is one that I have positioned myself in. I'll just remove all this right now. So as you can see, it was in a raging bull market until 2008. And can you imagine back then saying that it's about to go into a 20-year bear market? You would have got laughed out of the room. But that's exactly what it did. Down, 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 down. From here, we've come up to the equal highs. And now you see we're starting to buy a bit higher here. So we're getting that same beautiful little pattern I like to look for, which is buying, liquidity bottom, buying, shaping up here right now. Again, very oversold on the 3 monthly, just crossing bullish. And if you then zoom into the weekly time frame, you can see that the minute we get above that $27 is where we then start to change market structure and break out. Okay, so looking at, I added here at $22, and I'm just waiting for confirmation for it to get above there. Massive company, $60 billion, not going anywhere. It's the largest oil and gas miner that we've got. Pays a really good dividend along the way as well. Like you've got a, nearly 7% dividend. Yeah. I never choose something just because of the dividend. But what you want is, just like when you buy a property, you don't want to just collect rent. You also want capital growth on the property.
Correct.
So that's what you've always got to think about when you're buying these dividend plays, is that I will also get the capital growth on it and just get a nice little healthy dividend along the way as well. And don't have to worry about the headaches of tenants and, repairs and all that kind of rubbish that goes along with it. So yeah, Woodside's, largest one. It's not a small cap. You have to worry about waking up one day, it's down 30%. A fluctuate of 2 to 3% is kind of normal. And yeah, you can sit back and relax. The other thing you can do is adjust it for the dividends here. And it kind of gives you that bit of a bigger picture in the fact that you can see that it was in a bull market. You can see how it was in a bear market from this period here. This was where it went sideways. And you can see this first wave up took out the high. And what we've done here now is just come back into a nice, healthy Fib 618 retracement.
That's it.
Perfect. And then same thing, once that changes market structure through there, what's it doing? It's going to be breaking back through this major resistance back up. So you can also see that's the wave 1, the wave 2, and then we're entering that public participation of the next trend as well. So similar to what it had here. So yeah,
there you go.
That's one that I've got in my swinging position and super, etc.
Amazing, thank you. That's a massive non-financial hot tip. Woodside Energy in particular, and we'll do some quick rapid fire. Quick look at gold, quick look at platinum, etc. But just quickly, I can tell some of my subscribers will go, well, I love my precious metals. I don't know if I want to get into other sectors, but from about here, do you think, not holding your feet to the fire, but the energy sector will continue, even with the excess phase of the precious metals still to go? Do you think if one had to choose, if I had to choose, stick with precious metals, or I wanted to get into something more emerging, do you think one's going to definitely outperform the other? Do you think so? Energy will be even like silver's going to, excess phase, but the oil and all that, do you think that might be outperforming that?
Good question. So again, I always say the answers you seek in the future can often be found in the past. So let me go to the past and show you last time.
Sure.
We had the NASDAQ have a decent correction, and we can look at what materials did and what energy did during that period, and you'll start to see that same kind of correlation. So let me show you. So here, daily, and let's go daily here as well. And we want to go back to, so what I'm going to do is go back to 2022, which is where the NASDAQ went into a bear market, which is where you're in that late phase, and then commodities started doing very well and energy started doing very well as well. So if you look here, this here, during that, so the NASDAQ topped out kind of like January 2022 and then went south until September. So that same period here, that's here. So just around there going up, you can see materials went up initially, and then again, see that date, April. It topped out and then came back during that. So it ran when the NASDAQ first started collapsing. I should probably bring it up 4, you can see better. Let me do 3 here, and I'll bring the NASDAQ here, NDX.
Which, by the way, is looking a little iffy at the moment, the NASDAQ too.
Yeah, I'll show you why as well. So if you see here during this first drop down.
On the very right panel there.
Yeah, the very right. That's the NASDAQ. So bear market NASDAQ. And you'll notice materials still kept going up. You'll also notice energy kept going up there as well. Okay. Then the NASDAQ kept going down, and that's where then materials joined it. It started going down as well. But look what energy kept doing. It kept going up.
Okay.
So so that's why, again, that same kind of period now where materials will probably keep going up until that April period.
Yep.
And energy has just started. You're here, February. Energy just starts, get that put, and then it still continues into September, but materials will likely be pulling back. And then, the NASDAQ keeps rolling. And if you look at the NASDAQ right now, so let me show you how silver topped on the 1 hour. So on the 1 hour. And you saw this, Joe. We got this top to perfection.
We got it to I was we were in a staff meeting private thing. You're like, oh, here we go. And then I let my subscribers know around about that time as well. So hopefully, if they feel like, taking some profits, hopefully they did around about there. Not that we sell our physical silver really, but, silver miners,
No,
etc.
No, just for short term.
Yeah.
So here, can you see we had this uptrend, you found resistance, and then it went into this rising wedge here, this kind of picture shape.
Yeah.
And then it came up, grabbed liquidity. It's that same fake out I showed you guys at the bottom.
That's it.
And then we sold off, we came back, and then we sold back at this spot again.
Lower high resistance.
Fell off.
Yep.
Textbook non-phase swing stuff. So this exact structure is happening on the NASDAQ right now on the daily. So if you go NASDAQ and go the daily, you can see the same thing.
There we go.
It's come up. It's got this same where it's coming up. You've had the fake out above.
Yep. There she is, and now falling through.
Okay, so you can see selling, came out above, came back, sold there again, and now falling back.
Yeah.
Okay, so you're getting that same kind of thing happening right now, which is why I opened a short there, just because I didn't want to close the positions I've got.
Yes.
And I just wanted to have something to protect it until I know and get more data.
Yes.
Okay, so still early days. But that one there, and also the NASDAQ against the S&P 500, you can see it's actually broken down massively as well.
Yeah.
So, this is showing that NASDAQ's now in a bear market against the benchmark.
Yeah.
You shouldn't be there. It's bearish. Get out. So
and that
you want to be out of your growth.
Yeah. And that can mean at the time, though, where everything like that is going down, the precious metals can have a bit more of a dump as well. Is that?
Yeah. So precious metals typically still do all right during the first part of the dump, like I showed you. Energy does very well. And energy is pretty much an inverse relationship to the NASDAQ, which is why I'm very heavily positioned there. But then eventually they will kind of align a bit. But it's because if you look at the stock cycle to the business cycle, commodities and energy, they perform well at the top of the cycle, late cycle. And then it starts moving into your healthcare, consumer staples, and utilities, et cetera, more defensive kind of plays. Yeah.
Got it. Awesome. We have about 5 to 7 minutes before you need to go and do your other stuff, and then we'll stick around again with the show for a little bit longer. I might get to some quick chart requests if we have any, if you're willing to do like a rapid fire. Oh yeah, this, no. You happy for a couple of chart requests? Lovely. Let's see. Yep. Let's see what we've got for the comments. Preferences go to super chats, but I think we've just got a couple here. Someone has asked about platinum. Can we have a quick look at platinum if you don't mind?
Yeah, definitely. So platinum. Sorry, excuse the mess. I'm always doing so many drawings, etc. Let me zoom out. So same thing. You can see the accumulation phase. No one's talking about it. Long, drawn out, capitulate through time. And then you can see we're in that public participation phase as well. Okay. If you zoom out, you can also see where it is on a much better cycle. Let me move out here 1 month. you can really start to see where it is on the bigger picture. Okay, you can start to see last time we had the bull market back in the 70s, you can see 72 up to 80. All right, You had that 10-year bull market. And then you can see from 1980 until 99, so 20 years, you had your bear market.
Got it.
Okay, you can see that's your bear market.
Then
from there, 2000 to 2008, 10, whatever, again, 10-year bull market. Okay, so 10-year bull market, 20-year bear market, 10-year bull market. And if you look here, what have we had from 2008 until there? 20-year bear market.
Yeah, there you go.
So you've only just started. Platinum has only just started. You got plenty to go. Historically, platinum is actually supposed to be higher than gold.
Yes.
So it should theoretically be above $5,500 right now. And you can even see just from previous cycles, you don't go up. We broke out in May. You don't go have a 20-year bear market and go up for 6 months and it's all over.
Yeah, that's right.
Okay, history tells us that bare minimum, you get a 10-year bull market. So, and you can even see 20-year comes back to the level of support. And if you do all of your ratios against gold and silver and all that, you can still see even today, platinum is historically still cheap compared to its other precious metals, brothers and sisters. So just begun.
Long way to go.
Could get a bit of a healthy zag retracement, whatever, but any dip is a healthy retracement.
Agreed. They're screaming at me gold, so if we can quickly check out gold, and then I've got maybe one or two specific tickers for you as well. That'd be great. And you let me know when you've got to run. So.
So gold again had a raging bull market from here. Okay, and it went from $30 up to 800. So what was that? A 20x or whatever is it? Whatever that is.
Like that. Let's go with that. Sure.
Yeah, and then you can see it went in a 1980 until there. So you can see you had that 20-year bear market. It actually took 28 years to take out the all-time high.
Mm-hmm.
This wave here is the wave one.
That's the amazing thing to me.
I know. And then you can see this here was correcting this bull market. So you've had a 01 to that, so a 10-year bull market. Then from there, you then had a 5-year bear market.
Mm-hmm.
And then this is then that next wave. So you're getting another one of these again still coming up before you then get that. And then you get the excess as well. So gold's got so far to come. Still, you can see it in the cycles. You don't come out of a 20-year bear market just to go back into one again.
Exactly.
And you can see it in the gold to Dow ratio. That's the key thing. So if this tells you your big macro outlooks, and you can see Great Depression, energy crisis, tech bubble. Now we're still undervalued compared to equities. We're in the bottom range. You only worry about gold being expensive when at least you cross the mid-range. Up here.
That's right.
So it's still only just begun. That's showing you again that was that wave one, deep wave two, and we're moving to that public before going up for the excess as well. Commodities, long way to go. Multi-decade bull market. But as we know, markets don't go in a straight line. They zig and zag. There will be multi-year bear markets within the big secular bull market. And that's what people need to understand.
No problem. Maybe 1 or 2 minutes left to go if you have that time. Or do you need to go right now?
Mm-hmm. No, I can take one more,
One more. I'll go something specific. Let's see. Jason Ashworth has asked, Joe, could you have a look at some tungsten miners with David? Tungsten mining, ASX, so it's TGN or EQR, please. So this is in tungsten.
TGN.
Or EQR.
Okay. So you can see it was in a nice big bull market there. It's had a big correction back. This is that same thing, that falling wedge
that
we talked about with the NASDAQ going the other way. So see, this is that same thing I showed you.
There we
See
go.
and then you see that liquidity top, why they're selling at that same point, and then they roll over. So this is
That's amazing.
See how it's the same pattern?
Amazing.
It's amazing how you're like, oh, I've seen that play before. And this is what I always say with sports. Like, you watch a sports game and think it's just a random play. It's like, no, they're trained plays that they do every single day of every week over and over again. The market's the same thing. You get these same playbooks that happen over and over again. So yeah, this should be the beginning of the bull market. That's your first wave up, pullback. This is the public. So, you've had a bit of a run. You could have a bigger pullback still, but then So it's still good, still healthy. Nice. But you kind of can't buy now because, it's gone from 7 cents to, it's already done a 5X in 3 months. You know, like you've missed the breakout. This was the point there to buy.
Lovely. If you have time for one more, it's just in a slightly different space. Oklo, which
I can take one more.
Yep. OKLO. And then you've got to go.
OKLO.
So it's in the nuclear space.
So on New York?
Correct, yep.
All right. So you can see it's been in a raging bull market since 24, went from $4 up to 180. So that's a big bull market.
Yeah.
Pretty big. So you got to imagine there was a lot of profit taking that took part there.
Yep.
So if we now zoom out and look at it, you can see at the moment it's in a bear market.
That's it.
So no, it's not a place that I would be at right now because you can see it's in a bear market.
Yep.
What it would need to do is start to then change back bullish market structure again.
Correct. Yep.
But it's not that it's bearish. It's just it's had one cycle. It's correcting that cycle, and you've got to wait for the correction to finish before going.
Absolutely. Thank you very much. And this is the things that everybody is taught at Mastering the Markets. I am doing the year-long program there, so I'm very much grateful for being part of the community. And of course, I don't just call you David. I don't just call you ASX trader. I now call you boss as well, because I'm literally an enrollments advisor at Mastering the Markets. Now I'll talk about that in a second. But David, I will let you go. You've got meetings to get to. Much appreciated. And hopefully we'll have you back on the show soon. Great to have you again.
Pleasure, Joe. I'll see you again next time. Thanks, mate.
See you, mate. I'll let you go.
Bye.
All right, let's go over to here. Let me get over to that main screen. That was David Bird, aka ASX Trader. Couldn't get to all of your particular requests, unfortunately, but he's got so much to talk about. And while we're here, we're here for another, or at least another 15 minutes roughly. So get your comments in right now, and I'll take a quick look at what the silver price has done on opening. And let's just take a quick look at the market as well. You're watching Good Morning Stackers. We didn't get to do a synchronized slurp before, so we'll do one at the end of the show. So many people watching. Fantastic. Great to see you. By the way, I am Joe Main. I'm a stacker of precious metals, been stacking since 2010. As I said, made all my mistakes back then. I was buying in the halfway through the excess phase, which I didn't realize I was doing at the time because I didn't have a proper education into how the markets operate. So David is my new boss. He's the founder of Mastering the Markets, and I am doing the year-long program over there. If you want to find out more about that, you can send me an email to joe.main@masteringthemarkets.com. Right at the top there, the April course intake opens in a few weeks. So you can find out from me, and I'll give you the skinny, the 411. Let's go to gold quickly. I just want to see what the market has done on opening. Let's see what's up for the day. Let's see. Let's take a look at silver. I'll take it over here. Quick look at silver. All right, silver's up a little bit today. So we're up about 2% today. So we're sitting at around about that $89 mark. I did post on the Gold and Silver Stackers Australia forum earlier that, and again, this is all the stuff that I'm learning from Mastering the Markets. David happens to be one of my educators. So we're group live sessions every single week, one topic every week. And, I've gone through 2 units so far. And the first unit, which is 10 weeks, which is term 1 of the course, is learning about all this stuff about changes of market structure, about expected resistance zones and Fibonacci and all this stuff that you've seen me do much more recently is because of what I've been learning. So you can see here it's the expected resistance range, or it's called the ZAG zone. I'll pop that actually off there. It's in between that 0.382 and the 0.618. It's the expected move, the expected response after you have such a large move, right? So after you had that move, and like David showed you before about the 1 hour on silver, that was the same thing that I was seeing as well, again, because I'm learning the same things. And I did let my subscribers know, particularly in the Silver Investor Club, when we broke through that roughly 107 line, that was looking like, okay, now a larger dip is coming. So after you have a large dip, well, you have a response, right? What goes up must go down, or what goes down must go up. So markets zig and markets zag, but they can retrace usually roughly 1/3 to 2/3 of that move. So 1/3 to 2/3 roughly is anywhere in this box right here. So this is the normal expected range. It's not until you get through that range and up through here, then you can say that it's nothing else other than, just a retrace and the trend continues. Okay, so you've got to watch out from about here. It looks like we might potentially be we tested it. Looks like we might be getting into that box, and that's good to see, but it's not until you get through around about 102, 103 US dollars, which happens to line up, what do you know, really perfectly with that previous area of resistance right there, previous area of support, right? So support might become resistance here. So anywhere up into about 102, 103, you've just got to be careful because that could be some kind of partner leg up and then a rejection and then back through. What I would suggest is if you do see something like that, a rejection and then back through here, and they're not buying off here, the question becomes, hang on, why aren't they buying here? So what's going on with the psychology? So that could be potentially lower prices coming. Not saying it is necessarily, but just got to watch out for it. And as David said just before, and that's really positive to hear, he actually thinks, as he said before with silver, that we might actually still get some higher prices into April. This is his feelings, his thoughts. Might get higher prices into April before then we have that longer sort of shake you out over time thing, which takes you into sort of that September-ish kind of move. So that's what he's thinking. So, hey, here's a possible another chance. If you missed, let me put it this way, if you're the type of person that is going, I definitely want to sell out of some of my silver because I don't want to ride that 6 kind of month wave into September, then maybe here's your second chance if we get into new all-time highs. But what you're going to hear, and this will be the big thing, what you're going to hear, if we get into here, you're going to hear, if we get to here, you're going to hear the narrative go ultra bullish again and go, oh, that's it, guys. It's now to $1,000 an ounce. Just got to be aware, as I've been saying, of the fake outs. Okay, get you excited, and then it just travels around, just choppy for ages and ages, maybe until that kind of September timeframe, and then that is going to be the absolute kicker. When then we go into the excess phase into silver, and every man and his dog is getting in, and that at that point is also when the silver miners will go absolutely hell for leather as well. So that's the silver price. Anything else? How have we opened for the day? Anything else looking a little bit bullish? Let's take a quick look and then I'll do some comments. Righty, it looks like, let me check that again. And I'll pop this over here. You're watching Good Morning Stackers. I'll get rid of that so you can see that a little bit better. Anything listed with a yellow flag is something that I'm currently in, unless I have not changed it. Let's see. Not a lot is up today. We actually have a whole bunch of down today. Okay, so we've got Bannerman Energy is down. That's uranium. Okay, we've dropped 20% on M79. Okay, that is Mammoth Minerals Limited. Okay, so a bit of a downward day today. AGE, which I'm currently actually now out of. A couple of other things. Okay, so a little bit down today. Woodside Energy, this is the one that David was talking about in the energy sector. He's very, very bullish on that. That's a little bit down, but not too much. YAL is a trade that I got into yesterday. That is to do with coal. So that's up from my position. I got in around about here at about $5.90 something, roughly there, and we're up from yesterday. That's pretty much it. Let's go back to the screen, and I'll read through some of your comments as well. Savvy Stacker says, was good to bring you both together. You did. Savvy Stacker introduced me to the Savvy Investor Facebook page, and then that got me down the wonderful world of getting into Mastering the Markets community, and then I started doing the course, and now I work for Mastering the Markets as an enrollment advisor. Again, send me an email, joe.main.masteringthemarkets for the courses. There's a 3-month course and a 12-month course. I'm doing the 12-month, but you can do the 3-month. And when you come out of the 3-month course, you will be such a better investor just after having educated yourself just a little bit on how a technical analysis works and the foundations of it. Okay, amazing. Go away in May, come back after Labor Day. About the whole silver thing. Yes, that's exactly right. Sorry, Joe, that we didn't get to look at. If you were saying Bird is lit as in he's lit as in he's on fire, yes. But if you meant LIT as in the lithium ETF, sorry, I didn't get to all the chart requests. Platinum, we got your Oklo one there, and we didn't get some others, but my apologies, he had to go. Sorry about that, Jack Salisbury, AMD, but I'll take a quick look. Sure, why not? You want me to take a quick look at AMD? Let's have a quick look at AMD. I'll have a quick look. Again, I'm learning the similar things. AMD on the NASDAQ. Is it AMD Arrow Minerals, or are we talking, I presume you're going to be talking Arrow Minerals. Let's go with that. Is this Arrow Minerals you want us to look at? Woof. Let's have a look. Yowza. I'm going to assume it's Arrow Minerals, but let's go with that. And then you might be looking at the other one. If it's Arrow Minerals, you're in a total bear market and nothing to talk about. So it might not be that one. You could be turning around soon, but nothing. It's total bear market territory. And nothing saying at all just yet, except for you do have some bullish divergence on AMD. This might not be the one you're interested in, but out of interest, there is some potential bullish divergence happening, but you don't have a change of market structure. Okay, and it's a very small cap. It's like 17 mil market cap. This is like a nano cap stock. So potential bullish, but yeah, can't really say. And if you're talking about AMD in terms of advanced micro devices, well, let's have a look at that. Here's AMD Advanced Micro Devices. Oof. Okay, you have a double top on Advanced Micro Devices. If this is the one you're talking about, you can see it very clearly, okay, because you can see you have massive bearish divergence between the price and the indicator. So total textbook double top, and it's probably about to, if it hasn't done it already, it's probably about to break. You also had a massive gap down as well from 236 to 200, pretty big gap down. It's likely that is going to break and keep going lower now. So yeah, very textbook reversal pattern. And if you wanted to find, because you can see the equal high, lower high, that was absolutely setting you up. If you had have known this ahead of time, you had have known about bearish divergence, you would have seen, double top, lower high, and then a change of market structure. You would have seen, there we go, on probably the 1 hour time frame, and look where it gapped below on the 4 hour. Right there would have been your, well, actually technically on the hourly, you would have said there we go, right there. The hourly would have been around about there, would have been your kicker at about 250. On the 4 hour, your get out would have been probably technically here at about 230, because that's a break of market structure on the actually no, it's not. That's no, it's still around about there at your 250 mark, and you're totally going to get some extra downward movement on AMD. And the expected support zone now is going to be between here and here. So right there, that's what you're looking at, and you're looking at this zone in here for. You need support to come in here. So could it bounce off anywhere in here? Sure, but that's what you need. And isn't it interesting again? After the fact, isn't it interesting how it all just lines up? Look at that level of support there right at the bottom end, and that's at $150 for advanced micro devices. You are absolutely 100. Well, I'll give you 99.99% guarantee you are going to head into this zone here. You need to see it bounce off. Okay, could it bounce off here at 170? Sure. What you absolutely do not want to see for AMD is it break anywhere, and I should say close anywhere below 150. You do that, oof, bad news, okay? Because the question becomes from there to there, so there to there, and then there to there. That's a 62% discount from the top. And if people aren't willing to buy at a half price, okay, if they're not willing to buy at 60 to 63% off and the prices are still going down, you got to wonder what's going on. It's like, why aren't they seeing an absolute bargain there? So then you could potentially say that's even coming down to the 80 kind of mark. So watch out in this zone here. Anywhere between 150 to 195 is the expected support range. My bet would be, see that? That lines up really well with that halfway point around about 170. That would be the main area that I would look at for a potential reversal back upwards. Cool. That's advanced micro devices. Again, all the stuff I'm learning from Mastering the Markets. And I actually learned all this stuff in particular. I learned all this stuff. That's the simple stuff. This is the stuff that you learn within the first unit of the year-long course, or it's what you learn in the 3-month course. You come out of the 3-month course knowing all of this stuff. Okay, now I'm doing the advanced stuff as well, and I'm starting Elliott wave theory at the moment in the year-long course. But if you do the 3-month, which for a very small amount of outlay can give you a lifetime of knowledge, it teaches you how to fish. I cannot tell you, really, you should be sending me an email, joe.main@masteringthemarkets.com. Sorry we didn't get to the rest of them. I probably don't have time to go through them myself. We'll just do some final comments. Great analysis on platinum. One follow-up on platinum is there a good leveraged way to be in long-term platinum except for SBSW? Great question, Votive. I did buy SBSW. Instead of buying physical platinum, I bought SBSW because it was a leverage play. I did well on that. And for my subscribers already know this, but I actually recently got out of it and I swapped into something else. Let me show you what I swapped into. Then I swapped out of that. Hang on. Let me just quickly show you what I did do. And then I'll show you where I am sitting at the moment. So this was SBSW. And as you see here, it came up to the previous all-time high. And it really, if history doesn't repeat, but it does rhyme, you come up to that level of about that $20 level and a big move down. $20 level, move down, $20 level, move down. $20 level was probably going to be around about like people taking some profits here. Now, I don't think that's finished for SBSW because platinum's got so much higher to go. I think you get some kind of retrace here. We don't know exactly if that's not on the logarithmic. If I do SBSW from the low and the high, anywhere in here is your expected support range. So that's somewhere between $14 to $10 roughly is what you're probably going to get. Some kind of sweep into there, maybe there, no lower than there. Okay, that would be not good. There you go, right there. Look at that. Previous resistance, previous support. This is all the stuff you learn in Mastering the Markets, and it's so funny. It's like Neo with the Matrix. I can see it all now so clearly because I've had that proper education. Previous support became resistance. That's at the 0.5 Fibonacci. So I'm going to say, if we have a decent retracement, it's coming down to $12 and you'll probably find support at that $12 range. So yeah, watch out anywhere. I don't think it'll get down to the 10. Watch for $12. That would be very perfect. Or, bouncing off the top end here would be very, very bullish. But yeah, between $14.30 and $12 is your best zone, your best buy zone. Cool. My point is though, I was watching platinum versus copper. Okay, so what I ended up looking at was SBSW versus the COP X. Okay, I was tracking this, I think it was. I think it was this. Was it SPSW versus COPX? Yes. And then I decided to rotate into COPX. Now, I actually then decided to rotate out of that because then I saw some bearish divergence coming in. So what I've been looking at is COPX versus the energy sector, again, because ERX, because David in particular is incredibly bullish on the energy sector right now, oil in particular, like he showed you. That's not it, but that's actually the opposite of what I want to show you. I'll show you ERX. Okay, so as David showed you before, so the energy sector, which is the XLE on the New York Stock Exchange, has just broken out. Okay, and he was showing you that was it the take out the high, take out the low thing he showed you before, just like the Dow Jones Industrial. Take out the high, take out the low, and this is where it fakes everyone out. So everyone goes, it's going to the moon, and then it fakes you out. And then we go, oh, this thing sucks. Oh, it's broken support. It's going to zero. And then it does that to get you on the wrong side, comes back up, and now you've just broken out. Okay, so the energy sector looking very bullish. Okay, this is, you're looking at it as if you were looking at silver at around about your $25 to $30 mark. That's where you are with the energy sector right now, as if you were looking at silver back in 2024-ish. Okay, so that's got a long way to go. Okay, that's your one, that's your two. Then we've got public participation, excess, and all that. So that's going higher. But I was like, well, I can't buy this particular thing. So what's something that I can get into that is like a leverage play on that? And that is ERX. None of this is financial advice, and this is just what I'm doing. Okay, but you can see in a similar fashion, it is breaking up as the energy sector is breaking up. And then I was like, well, what could I potentially rotate from and into? So then I went ERX versus the copper miners, and then I just noticed this on the larger time frame that I'll go into the shorter time frame, and I'll tell you what I've done out of interest. So that's the logarithmic. You can see here again, we talk about what goes up must come down, and you find an expected range, and that expected support range, again, we talk about that 1/3 to 2/3 retracement, and that's within that zone. Now, where did we find perfect support at? Right at the bottom end of the zag zone. So then on the monthly time frame, you zoom in, and then you go, okay, what I need to now look for is a change of market structure, a bullish change of market structure on the smaller term time frames to say, oh, I think it's about to take off. So I went to the weekly, and then I go, okay, well, the weekly you got to get above around about that ratio number there of whatever that is, okay? But then you go to the daily and you go, oh, okay, is there a bullish change of market structure on the daily? And do we have any blinkers to suggest that we might be turning around on this particular ratio? Well, yes, we do. Pop in the indicators. And then you had some bullish divergence. So lower low, higher low on the relative strength index. So there's that one there. Then you had equal low, high low on the relative strength index. So that's some complex bullish divergence coming in. And the kicker for me was we had to break through once again right there. If you broke through, then technically it was there. If you broke through there, then I would say, oh, wow, it looks like the energy sector in general is going to, is at the bottoming of, it's going to continue to outperform copper specifically. So I know I'm getting very specific here, okay, but I was just looking to rotate into something that has more of a chance of outperforming the market, if that makes sense. So I recently, on the break of there, I just rotated out of my copper mining index into the ERX specifically. Not financial advice, but it is a leveraged play against the energy sector, okay? So if the energy sector is going to continue to go up, then ERX will. And I think I may have found the perfect bottom there. So let's see how we go. If we break back through, and you have got to have a stop loss, right? So my stop loss, my alert is set right there. If we start breaking back down through here on that ratio, I will just swap out of that ERX and I'll get back into copper or something else that looks a little bit more undervalued. But so far, I potentially may have done pretty well. I won't know until at least we change here. That'll be the big kicker. Right there, I will know I've done a really good thing, a really good rotation swap, but I'm happy to take it on the smaller term time frame as a risk for a potential larger reward, and then I've got my stop loss below there. Cool, so that's a random little play. And once again, this is all the stuff that I'm learning from Mastering the Markets, masteringthemarkets.com. Okay. Here they are. David Bird is the founder. He's one of the lead educators as well. They have 2 courses. I'm doing Tech 201. I started it in July, so I've got, the half the year to go. I'm doing Elliott wave theory at the moment as the current Unit 3, but you can do, and I had to do as Unit 1, Tech 101, Dow Theory Principles and Technical Analysis Foundations. Any investor who wants to be good and wants to know, I'm good at finding bottoms of stuff, I'm good at buying and holding, but how do I know when to get out of the market? If you don't even know, because I've learned all my lessons, as you know, bought silver in the excess phase. I was a crypto millionaire twice and I lost it twice. Okay, I've told my subscribers this story. If you're not educated, at least on the basics of technical analysis foundations, you don't know how to spot weakness in the market as it's going up. You might think you're the best investor in the world. You bought something, it's doubled. You're like, everyone's going, yeah, this thing is the greatest. It's going to the moon. And if you don't know how to spot weakness, you're going to be holding the bag. Okay, don't hold the bag anymore. Get yourself educated for a small amount of money. It's really quite small. And I should tell you, individual results vary, of course, but for my year-long course, what I've gained in portfolio appreciation, that's already paid for my course, if that makes sense. Okay. So that is that. Final comments, then we'll get out of here. We usually only go to about an hour, but we had some more to talk about. Thanks for getting him on. Welcome. My pleasure. Great insights. Thanks for your time. Joe, could you have a look? Could I have your take on David's opinion? Oh, okay. Joe, could I have your take on David's opinion that another silver high is near, in your opinion? Yeah, let me put it this way. If it's between me and David, defer to David's opinion rather than mine, because he's the expert. To me, I'm learning this stuff at the moment. So, you know how I talked about silver, and I thought potentially that the wave 3 top was in. It might not be, according to David, and I will always defer to him. So, for example, I was talking about back here. I said watch, and you still do have to watch out for it. Okay, you have to watch out for this $60 mark in case the market decides. And of course, David will say he could be wrong. Okay, so you've got to watch out for both sides of it. So he goes, that's what I think it's going to do. But you never know. You could have a flush out beforehand. So I do think that $60 is still potentially on the cards, but I will defer to David and say, if he thinks another all-time high is coming, then I would defer to him. But also watch out. Along the way, you could get that, where are we? It's that confluence of those two. Where are we? Right here. And I'll get rid of you. Remember that $60 level we've been speaking about? It's right in here. Get rid of that. This on the logarithmic scale on the weekly time frame. Just watch out for that confluence of $60. As I've said, it's around about here. You can see it's the 0.5 Fibonacci from this low and this high, and it's the 0.382 Fibonacci, both within their zag zones, right? Their expected resistance ranges. So I'll show you here. That's that range, and that is that range. So you can see it all coalesces. See those two lines right there? Right there, that's $58, $60 mark. Still got to watch out for that. And I think if you do see lower prices, it won't go lower than that $60 mark right there. That's the big line in the sand for me. And out of interest, I have a current very large stink bid, as they call it, at $60, the $60 equivalent on the ETP MAG, which is it is the Australian Global Physical Silver ETF. So if you can't get physical, now as you know, I'm a huge physical silver proponent, bought physical in 2010, worked for 3 major gold and silver bullion dealers, so I'm all about the physical. But if you want to nab quick prices, I would also have a look at maybe opening, a trading account, and you might want to nab the, oh, holy shit, we just tanked to X amount of price, right? But then you can take your profits and then buy physical with it, okay? But if you want to nab the prices instead of having to wait for your bullion dealer to open, also stock levels at the moment as well. A lot of supply issues, trying to nab that perfect bottom, okay? You can go to a trading platform like Moomoo or one of your other ones, and you can put in stink bids. Now, my stink bid is in, where is it? Around about that $77 mark right there is my stink bid for the ETP MAG. So if silver has that flash crash down to $60 US, that kind of coalesces with around about your $77 to $80 mark. So I have a massive stink bid just in case. And then hopefully, we head onwards from here, or we do that choppy thing, or we do what David suggests, and hey, might we get that and then we chop? I don't know, but I've got a massive stink bid at around about 77, 80 Australian dollars on that particular index. Now do we get to go? Do I get to go home now? I am home. Do I get to have breakfast now? Let's see. So to recap, did David say I'm going to be a multimillionaire in 2026? No, you have to wait a bit longer, Desi. You have to wait a bit longer for the excess phase taking you into 2030, 2032. It was that one. I got that one. All right, good. How weeks needed to reach 130 to 150 silver? How many weeks? Don't know. He's not, by the way, let me be very clear. David was not saying it's 100% going to happen. That's just his inkling between those two options. Wave 3 could be in, okay, but his feeling, and again, I defer to his, but it would probably be just a matter of, by April. Yeah, so by the end of April, that's where, if that's going to happen, it'll be around about by the end of April, because that aligns with silver seasonality. Once again, he's not saying 100% it's going there. I'm not saying it is going higher from here, but I will defer to him. But what you would get if that happens, what you would get is very much a fake out, and then you're going to chop for a while. So you're either going to get, I think, one of 3 things, and this is the point where it's like, well, technical analysis, it's just potentials, okay? Either that kind of thing and you chop for a while, or down into your 60 area and then you still chop for a while, or you just chop within this range. No matter what's going to happen, you're going to get chop until about September roughly. In the meantime, though, it could have a little bit of a peak out or a little bit of a dip further, but yeah, mainly sort of chop for September until about September roughly. And that's in that time, that's where David is very bullish on the energy sector as well, particularly oil and others. Is this going to be a much longer show? Will I get a chance to eat and have my breakfast before I have to start my day at Mastering the Markets, masteringthemarkets.com, talking to all the amazing people who are going to enroll in the courses. Nice webinar to generate some ideas. Thanks, guys. Oh, you're welcome, Adam. Adam is watching. Good to see you, my friend. Very well known on the Facebook forums. Nice transparency. Thanks for sharing, Joe. My pleasure, my friend. It's healthy for all. Hoarding is not good. Causes parabolic chasing. 98.78%. Final comments, and we'll get out of here. Restless says, "Hi Joe, do you think it's a good time to shift focus on platinum from gold, silver and gold long term?" Sure. Let me show you the. I love my ratios. In the last unit of my course with Mastering the Markets, which that'll start for me in April, I think it'll be. It's all about ratio investing. Now, I have just happened over the years. Been very focused on ratios as well. I clicked a number of years ago. I was like, oh yeah, you can do ratios against things, right? What's undervalued versus overvalued. But I'm going to go on a deep dive with that in Unit 4, but I still have a bit of a decent knowledge with it. So you want to look at platinum. Let's do platinum versus gold. Now, I have been saying this for a long time. Okay, here's your platinum versus gold. Okay. We were talking about platinum versus gold down in here. I'm going to get rid of all this junk. Actually, no, I'll keep it. We're talking about platinum versus gold before it pumped through. We were talking about platinum down in this area here, saying it was highly undervalued, which it was. And this was before it broke through $1,000 and went on to its public participation phase. But we had noticed back here the bullish divergence, lower low, higher low on the relative strength index as well. I'll get rid of the OBV for a moment. So that was showing signs, and a massive historical bottom, okay, versus gold. And then it broke up. It's broken up again. It's 1, 2, 3, 4. I think you're probably in the early phases still of platinum to outperform gold, and I think it will over time. Okay, I think the bottom is in for platinum versus gold, in my opinion. Once again, you can see it pretty clearly on the chart. Lower high, sorry, start again. Lower low, higher low. Can you see that on the relative strength index? All right, that's called bullish divergence. This is what you learn in Mastering the Markets. That's bullish divergence. What you technically haven't had yet on the quarterly time frame is a bullish change of market structure on the quarterly. So we can't say 100% over the absolute long term that gold will that platinum will continue to outperform gold. It's not until you cross through. Get rid of all this junk. It's not until you cross through here that you can say, oh, we're finally making a higher high on the quarterly time frame. So that's your kicker right there at 0.72. But again, if you want to get the perfect entries, you go into the smaller term time frames and you see, oh, okay, it broke market structure on the monthly. So we're now actually making higher highs on the monthly time frame. So that's good. Then you go into the weekly time frame and you go, oh, okay, we changed. Well, on the weekly, you did it actually at that same point. So that was looking good. And then we noticed it on the daily time frame. That's when you go into the real minute area and go, whoa, what are we doing on the daily? And it was actually right here, right there was the absolute bottom of platinum versus gold. That's where it changed market structure on the daily time frame. And since then, where's it gone? Okay, as soon as you broke market structure and you went from bearish to bullish, and you went from bearish, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower high, higher low, higher high. That was your bullish change of market structure. That signaled the bottoming, the absolute bottom, pico bottom of what I believe it is, of platinum versus gold. And then it did it on the larger time frames, and then it's yet to do it on this larger time frame here. But once you do that, mate, you're absolutely set. Round about there on the quarterly. If you wanted, you could say that this was a pivot. If you want to say there, I'll give it to you there or there. But it's looking really good for platinum versus gold. So I think that will continue to outperform. I've been saying, actually, let me show you platinum versus silver. You're keeping me here all day. I've got to have my breakfast. Now, here's the difference. And this is what I've been saying for a long time. If you go back to one of my earlier videos from, a year ago, maybe longer, I created a video and I entitled it, Silver is King. And in that video, I said, silver is king, platinum is the queen, and gold is the jester or the joker or whatever you want to call it. I said, I see silver as still being the king for a good period of time. I think platinum will continue outperform gold, but platinum hasn't done it versus silver yet. So if you're thinking about swapping your silver for platinum, wouldn't do it. No time to do that yet. And here's the reason why. But versus gold, yes. So if you own gold, swapping for platinum here, probably not a bad idea, not financial advice, but versus your silver, no, don't do that, because silver is still the king at the moment. And here's why. Here's platinum versus silver. You can see this support zone. What do you learn in Mastering the Markets? You learn about support zones. That's like week 2 or week 3 of the 3-month course, right? And you can also see, what do you learn at Mastering the Markets? Well, it hasn't changed market structure yet. Lower highs, lower lows, lower highs, lower low, lower high, lower low, lower high, lower low. You haven't done on the quarterly. Let's take a look at the monthly and see where we are. We were doing it. It looks like we were going to do it on the smaller term timeframes. No, silver is still the king, right? So look at the weekly time frame. Not even on the weekly yet have you done it. Okay, let's look on the daily time frame. Not even yet on the daily. You might. Okay, here's what I would tell you. If you're really looking at hawking an entry, like really like going into the minute, then you could say right about here, if you close here, that will be the first time since back here, back of July of last year, that you would be making a bullish change of market structure on the daily time frame. Again, lower highs, lower lows, lower. That was a higher low, but then it reversed. Okay, so maybe here, if you get around and do that, you could say, and through that support right there, then maybe you could say, maybe now platinum's onwards and upwards versus silver. That would be, doing that would probably potentially be like finding that daily time frame on platinum versus gold that I showed you before. But really, I wouldn't be interested until it at least gets back out of this zone here on the monthly. Get rid of you. Yeah, through here, because that's a major area of support. We broke through it. It was a fake out. We broke back up, fake out back below. So it's really not until you get up and above really here. And where does that match with? Oh, gee, what do you know? It matches and aligns perfectly, well, almost perfectly, with this trend line. Roughly, not so roughly, but you could do it from there. Yeah, kind of there-ish. It's not until you're getting out of here and sort of breaking out through there that you can say that we're out of the woods yet for platinum versus silver. So short answer is silver is absolutely still the king. Wouldn't look at it versus platinum, but platinum versus gold is looking very juicy at the moment. Is that it? So many people still watching. Thoughts on BHP and Rio Tinto? Short answer, BHP has got so much more to go, and you are in the public participation phase. And David Bird believes it's going to be the first $1 trillion Australian market cap company, and it's at about 250 billion now. You've got about 4 times on BHP. It is currently just breaking out of its accumulation range, and you're now in public participation. BHP I have in my super, and that's a long-term hold. So yeah, they are near their all-time. Screw it. They're near their all-time highs, but that's because you're making me do it again. Let's look at BHP. I'll show you where we are within the phases of the market with BHP. This is where you are. It's very simple. Cool. We talked about that. So David, talked about the phases of the market. This is what you learn in lesson 1, week 1 of the foundational course, Mastering the Markets. You learn that there's 3 phases to a market: accumulation, public participation, and an excess phase. Now, this excess phase last time for BHP wasn't much of an excess phase, but it did make a slightly higher high. And then what you noticed is you get the bearish divergence from the public participation to the excess. So massive top right there, almost a double top. Then you've got that 1, 2, 3 or ABC down. Now all of this right here, 1, 2, 3, 4, 5, that's a mini 5-wave move. That's accumulation. This was your wave 2 pullback. So that's 1, that's 2. The perfect time to buy would have been at the bottom of the wave 2 at $33, but we're at 51 now. You have just literally broken market structure on the quarterly time frame. Let me be actually not even broken it. You're continuing the market structure trend, because technically higher high, higher low, lower low, higher high equal lower low, higher highs, higher lows, higher highs, higher lows. You've just broken out. You are now in public participation phase, and I'll pop it on logarithmic. You've got the public participation phase and the excess phase to go. You've got this, right? You've got all of this. So right here, see from there, all of that is all of that, and it won't go exactly, okay? It never rhymes perfectly. Then you'll have a pullback, and then you've got an excess phase as well, and probably it will take you higher this time. That's where you are with BHP. I bought it a few months ago in my super, and I'm holding it for the longer term. So that's where you are with BHP. Rio Tinto, I don't have time to look at. Cheers, thanks. You're welcome, Hills Bloke. Could everyone do me, please, a huge favor and hit the big red subscribe button for me right now. Follow me on X, and I'll show you over there. I'm going live on X right now, x.com/itsjoemain. Can you do that for me? x.com/itsjoemain. Over there, I have 4,200 followers, over 5,000 subscribers on YouTube. Subscribe, because what you get is me going live on Tuesdays and Thursdays, implementing everything that I'm learning from Mastering the Markets. And of course, we talk about stacking precious metals. We talk about anything else investable. And then I do my individual videos throughout the week as well. So you get standalone videos too. This is gold. You are welcome, my friend. Question. So when do you say we switch from physical silver to miners, please? So that's quite likely. So this is it's actually a recent question. So what David was saying, when do you switch? Now, I should say, I would not be switching necessarily from physical silver into your miners. You can certainly do that. You probably want to keep a good chunk of your physical silver. Again, I haven't sold my physical silver, so I'm holding for the longer term. I'm holding for, and this is on the quarterly time frame on the logarithmic. Again, for those who are uninitiated, for the new watchers, which I've got a lot, that's the 45-year cup and handle. Cup, handle. Do you think we stop here? No. We're going to, I think at least, in my humble opinion now, I think about $700 silver is absolutely on the cards over the longer term. What you are getting now, coming soon, and you're into that sort of wave 3 top. So you got that 1, 2, 3. Could it be now? Could it be after that little bit of extra pumpiness that David was talking about? But you get that move into around about that kind of, where are we? Into that kind of September kind of time frame. So that's this again. This is on the quarterly, so you have to understand. I'll go to the monthly, a little bit easier. Into that kind of September-ish. Where are we? There's September. Okay, there's September. So from between now and here, it's a bit of a chop. It's not until roughly September that you start breaking out, and then you're on your way for the wave 5 excess move. That's what David is saying. That's when the silver miners go absolutely ballistic. You couldn't see any of that. Fuck, sorry. Sorry, guys. Right here. There's the up until September right here. Sorry. And it's not until you start, then you turn around. So there's that chop. Okay. It's going to, from a sentimentality thing, it's going to shake a lot of people out because they're like, I don't want to hold this thing for 6 months. I'm going to get it. Oh, Bitcoin's doing really well again, or whatever it is. Some people go to the new flashy thing, and then it takes off into 2030. And that's when you're going to see the absolute explosive move in the silver miners. And as David said, and as I agree, it's like alt season for rocks. Okay. And if I show you very quickly, I'm going to have to show you SIL versus silver. So this is the silver miners index versus silver. And this is the one I've been charting for a very long time. We were doing really well. We bottomed out here in May of 2023, sort of up to around about June 2025. I noted we were right about here-ish, and I said, watch out, I think we're going to turn around in silver miners. We did. What I didn't expect, and maybe others did, but I didn't expect us to have such a deep retracement here. This is where silver just obviously broke 50, went to $120, and it just killed the miners. Okay, but what did we do? We had a very quick spike, broke back down below. What was really positive about that spike, though, is where did we close the month? We closed the month above there. So it looks like a little flash in the pan. I am very bullish. I think we will turn around here. And then, again, sort of that September. Where are we? Around about September. There you go. There's your September line. From around about here, you could just faff around for a bit. From around about September, though, I think we're going to start massively outperforming into that 2030, 2032 kind of mark. And that will take the silver miners to outperform silver spot, I think, up into this general area up in here. That's me, though. Okay, you do you. I got to get out of here, people. I start my other work, in about 25 minutes, and I have to have my breakfast. Thank you so much for watching. You have watched Good Morning Stackers with me, Joe Main, going out live on all those channels on Tuesdays and Thursdays, and everything I do in between. Hit the big red subscribe button. And if you want to stick around for 2 seconds, if you've never experienced the magic, the wonder that is the synchronized slurp, well, you're going to do it now. We do it at the start of every single live show normally, except David, I forgot to do it this morning. It's where you grab a tasty beverage. I've got my tasty beverage with my face on the mug, and we slurp them synchronously together. Yes, if you have the ick, you don't have to do it, but really, it is the honor system. And we also dance it out at the end of the show because you have watched.
Good morning, Stack. Oh yeah, we're feeling fine. Podcast time.
Grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do the
Synchronized slurp. Now we're on.
3, 2, 1, go.
Good morning, Stack. Oh yeah.
Ooh, a deep slurp. Thanks for watching. You guys have been awesome. Hit the subscribe button. Stay safe. Stay informed. Keep stacking whatever you're stacking, and I will see you soon. Have a great day.